All right, so we've all been staring at the title. All right, so the time investment confidence booster, right? So I've bloviated here before, so you may know what you're in for or not. This one's not going to be on management, even though I know how to fire people, that's not actually the core topic here. I'm a self-taught software engineer, done IC roles in management, enterprise, and startups. My career path has been following complex problems, right? More than like trying to reach some sort of level or anything like that. I've often specialized in avoiding the fail whale, so if you know early Twitter, you know where that phrase comes from. I've been doing things with PHP that should never be done, like backends for cell phone companies. Debugging PHP when it was like error at line -1. Then handling internet breaking scale, like video streamers might accept to drop the internet west of Colorado. When we've had like Periscope and crop video at NBC. Redefining regulatory expectations by delivering advanced search and machine learning type things, and then building ad tech that like abuse the ad system by like sneaking graphical interfaces in through a 1x1 pixel load. And also launching at 1 billion requests a day on day one, which in early 2010 was a challenge. And so the last 2 years have been somewhat like more obscure problems, like creating psychological art experiences with my fiance, and teaching individuals to think differently. And then now I'm sort of working to like figure out tier 1 support and observability and DevOps for a high frequency trading service company. So they basically allow other people to trade at high frequency. They can also stand up as an exchange as well. And so we're going to be talking about the public parts of a very private ecosystem. You can sort of be like, well, what the fuck's the point of that? It's actually because even the public parts are hard to find because of how private this ecosystem is. And what we're really going to be getting to is this introduction of mechanical sympathy. And so what this talk is not about, it's not an introduction to trader bro lifestyle. This is absolutely 100% not specific to any company. The company I'm working with or other companies. This is guaranteed sort of like generic in that regard. Yeah, that's enough disclosure. This is not a discussion on the ethics of trading or capitalism. Someone else can do the Marxist bro talk, I guess. So 1 minute of downtime will get you fired. So in trading platforms, yes, it's not some brutal business ethos. It's a very clear requirement from the start. And you're given the tools, the resources to like not make that happen. If someone blocks you from getting those resources, it's their asset. So to give you some sense of what we're talking about here, right? So 1 second of high frequency trading global market stats, right? So 70,000 market date messages in 1 second. That's typical for a platform. We'll get into what market data in these terms are too as a part of this. 3,000 trade executions, 100 order book updates, thousands of trading decisions. Yeah, I'd say that 250 megabits of network traffic is generated is fair for about a second. Yeah, we do a lot, right? Like we generate a lot of data for that sort of like later analysis. And later can just be 2 seconds later. That's considered pretty ancient in some of these systems. So downtime in these systems is not passive, right? It's not like, oh, you're down, the user just can't click or things like that. The markets continue on. So whatever you injected into the market, trades-wise, you can't control them if you're down. So they're doing all their work, being accepted, rejected, and things like that, and you cannot control your risk during that time. And you can't undo executions when you come back in. There's no like, oops, I was down. Take that $1 billion trade back, please. Like, it does not happen. So how much trading is high frequency trading? It's generally accepted that it's 70% of all trades are algorithmic, but it's not evenly distributed. Some of the things like Forex, that's like over 90% algorithmic. Give you some size and scale of things we're talking about. US stock market capitalization of the businesses that are traded is estimated around 52 trillion. US daily market dollars moved. So that's money moving hands, 800 billion is a fair number. Global daily is around 1 to 2 trillion. Famous trading failures. So in 2012, Knight Capital We're down for 45 minutes. That cost 450 million. So that's 13.6 million a minute today. Fast global markets, it's a fascinating thing of failure because they were actually a quote unquote like exchange to a certain degree. And when they IPO'd their own exchange, screwed all the other markets up and actually like froze multiple markets with their failure. And that contributed, it's evidence to a 10% decline in Apple stock as a result of that, indirectly. Goldman Sachs, they had an options failure in 2013, $38 million loss, a $7 million SEC settlement. SEC can get things expensive. But immediately fired. Yeah, because you most likely decrease public trust in financial institutions in general when these types of failures. Stress can extend to the banking sector. Banking sector I worked in, they're worried about runs, and that's social contagion. And so it's really, capital markets can really lead in towards those types of problems with liquidity of banking and stuff along those lines. So you likely damage companies and individuals participating in markets as well, right? Like people probably lost some real money. The failure could cause regulatory changes. So now you're going to change the market and increase costs because of it. You've lost the confidence of your employers and peers. That's probably one of the big reasons, right? You were given all the tools to not make this happen, and you screwed up. So you may be kept around for investigations and post-mortems. That's it. It really is a no-excuse ecosystem. So 99.99% uptime is the bare minimum, 8.64 seconds a day, 60.66 a week. So that minute is 7 times the allowable failure. Failure won't be uniform for a large trading firm. Open close is when you get the majority of the trade action going on. So if you look at like a graph of it, it looks like the silhouette of Batman, right? 2 spikes in the middle, little hump across it, spike in the beginning, hump in the middle, another spike. So midday failures wind up potentially being a lot less. So this is about talking about meeting these expectations of speed and performance and not being fired. I've learned that this is by having a strong sense of mechanical sympathy. Mechanical sympathy is architecture and code that physically aligns with the underlying hardware, and it's being one with the machines, tendencies and things like that. It's actually, this term, mechanical sympathy, was formed by a Formula One racer, Jackie Stewart, and it's really just like building for extreme performance and no jitter deterministic execution combined with excessive redundancy that eliminates a lot of typical downtime. And I just sort of want to really soak on this for a minute here, right? Like by building a system that is incredibly fast and incredibly consistent, you wind up really learning resiliency and how not to have that downtime. So we're not necessarily going to hyper-focus on like the quote-unquote topic of reducing the downtime. We're going to more focus on opening everyone's eyes to the reality of hardware and code that interacts with the hardware. And so there's other places where this becomes really important. Regulated environments, aerospace, gaming, autonomous vehicles, right? Because you have to know what the heck that steering sensor is doing, if you're going to control it. Audio processing for jitter, things along those lines. Medical devices, obviously. LLM performance, right? Like that's DeepSeek, right? Like DeepSeek is basically them figuring out hardware interaction a bit better. So we're going to focus on mechanical sympathy. So I'm going to give you an overview of trading, why it's so private, a bit about the communication specs, how networking plays a major role, complex event processing architectures, latency, coding in C, OS machine levels, Intel FPGA, operating the software and systems to reduce risk. This is going to be a freaking blur. If you heard like my previous talk, I talk fast, things move fast. This is going to probably be faster. I'm going to actually be intentionally skipping slides that have the details that people can go look into later. Use some of your favorite LLM or whatever you want to be used. I'll share it at the end. So what is being traded and why so fast, right? So it's stocks, stocks, currencies, futures, all these types of things, synthetics, which are like these weird abstract things. Trading is just a sell-buy agreement. right? Like actually moving the money is later. So that's really what we're just talking for is here is I have this thing I'm willing to sell, or I have this thing I'm willing to buy. And then the price. And the price advantage basically these days can evaporate in like microseconds. So you're just holding on to assets sometimes for microseconds. Speed needs algorithms, not humans. And there's this really weird phenomenon that you can actually trade just based off of the volatility of the market, how the swing in price is moving. So you can actually not understand how like some of the underlyings and things like that are supposed to work and just go off of this volatility. And so there's a trade life cycle, right? So pre-trade is receiving and analyzing market data to find trading opportunities. Trade execution, first is checking your risk criteria. Is this trade going to be below out my risk? And that's like a really interesting challenge because that creates like a wider data set window that you have to consider and things along those lines. Then it's sending the order to the exchanges and getting confirmation that it occurred. Post-trade is managing positions, reporting, submitting to a clearinghouse. Clearinghouse can be the exchange or not. It's like one of the layers of systems you're dealing with. They're mostly handling like the movement and settlement type stuff. Settlement is the transferring either the stock, securities, or cash. The finalized trades typically happens 1 to 2 days later, timing-wise. One of the interesting things with this is if you're like playing some sort of hedge with like, let's say like oil futures or some shit like that, and you go down and you can't get out of that trade in the last minute, you're gonna get a phone call of where would you like your tanker of sweet crude delivered? So this thing gets really real, really fast. So what is market data? It's a digital form of yelling at an open outright exchange. And it's basically like these weird like hand gestures and that they like interpret along with like saying like a short phrase of like, 3 or 4, things like that. And what's really weird too is this lingo continues into the digital realm. It does not just like go away. It's lingered around. It's one of the harder things to learn about it. So market data is a stream broadcast by exchanges of like the price quotes, order information, transaction details. It shows the current buying and selling activity for financial instruments like the stocks, options, and futures. So the fast and the financially furious, right? What are we actually talking about here in some of these numbers? So you're talking about 60 to 100 million messages a second, 180 billion a day. A couple of weeks ago, we went over 300 billion a day with the tariff drama. Responding to specific messages in that stream with a trade under 2 microseconds, sort of like a baseline. You can be in the nanosecond range of response with a trade with like medium complexity of the algorithm. Thousands of trades a second. And this is a really important part. There's no jitter and deterministic execution is critical. And we'll get more into that as well. We're talking about thin slice time, right? 60 seconds per minute. 1/1000th is a milli. Micro or a mic is 1/1 millionth. 1/1 billionth is a nano. So I don't know that you're going to be able to burn these into your head for the rest of these slides, but yeah, maybe I'll try to get some reminders in there. So jitter is the enemy of deterministically fast. And jitter is variation in processing time or latency. An example would be like 90% of your trades happen at 900 nanoseconds, but 10% take 3,000 nanoseconds. The weird thing is being predictably slower is better. A lot of the algorithms can't handle that variation. And this becomes this very interesting challenge of like, how do you get to max speed, but max consistent speed? Common jitter sources, right? So hardware is CPU frequency changes, memory refresh cycles, operating system, it's the unexpected interrupts. Schedule interference is huge. A lot of this you actually move outside of the kernel space to avoid the scheduler noise. Network is packet queuing, congestion, buffer overflows, things like that. Network is a whole interesting layer that we'll get into. Application is garbage collection and dynamic memory allocation. Garbage collection is freaking brutal. I do not understand how some of these firms try to do some of this stuff on Java, but they did. I think they're building their own jets, is what's going on. So deterministic speed is advantage. The advantage is private. And it's the privacy part of it. So knowing how fast a company can execute trades is a competitive advantage. So knowing that the trading approach, right, like knowing anything about that you can sort of front run another company's algorithm. In the words that you can do something just before you think they'll do it to shortcut their opportunity and to steal the profit from them. And so selling on speed is really harder than selling black market nuclear arms, right? Like I've gotten some witness to this. Like your customers come into you and they're like, we heard you're fast. How fast are you? Like, we can't tell you. And we can't even be like, wink, wink fast. Like, it's this really huge trust aspect that comes into play. And it's just, the privacy is really sort of nuts, right? Like your second NDA blocks you from talking about your first NDA. The copper and tinfoil hat, then mind reading, I don't think would be frowned upon. So to be fast, you have to transact first and persist to disk eventually. This may sound subtle. This is really backwards from like how a lot of distributed systems actually work. So you just first read the market data and react with orders. Second is the availability and then pushing that sort of out. And so you just make sure your memory is in a good state and you're sharing memory randomly. You're not sharing persistent files or data structures on a disk that has to get picked up and translated by the kernel. So it's safety first, yet persistence third, right? Which is a bit of an oxymoron, right? Like, I think a lot of systems, you feel safe once you're persistent. That is not really the case here. You'll just read off some shared memory and shove it to disk eventually. The big challenge is pulling data out to recover the right memory when you have a state after failure. And that's where you get into a lot of proprietary things. And I should caveat one thing here too, is if you guys ask questions at the end, I may not be able to answer them because I can't quickly figure out if I'm going to be talking about something proprietary. So now for the hardware. So co-location is where it's all at. You do not do this in the cloud. It's cage wars, and you're competing for the closest placement to the exchange matching engines. It even gets to this point where different exchanges have regulations on everyone having the same length of cable. And so you wind up with these weird cables just hanging all over the place. And in the hardware sense, everything is redundant. You don't send data just to one NIC in the machine. You split it, you send it to two. It's redundancy all the way through, end to end. And so a bit of a preview on the hardware we're going to get into. We're going to first talk about time, networking, NUMA, and then Intel FPGA. So fast time. That little chip is an atomic clock. Costs about $2,000 a chip. Goes in one of those devices, which is called the Precision Time Protocol Grandmaster Clock. And so it's unlike those big wooden clocks you would see in your grandparents' house or great-grandparents' house. This is our modern-day, equivalent. Reads from GPS, multiple sources to say, when is now? And then we also do interesting things like hardware timestamping on the network cards. But tolerances we're talking about here, right? So like within the data center, 20 to 50 nanoseconds, right? Geographically distributed, 100 to 200 nanosecond accuracy and understanding when the current amount of time is. So really, the big one is the clock drift, right? And that being under a microsecond a day. This is often audited by the FCC. If you're managing like a market maker, they have to have hyper-accurate records of what they understood time to be at any point in time. It's sort of nuts. And so it's specialized network hardware, right? And so microwave millimeter wave connection, so through the air, right? Chicago, New Jersey, 4 microseconds versus 13 milliseconds on fiber. There's a speed of light advantage. However, it's weather dependent. What did we talk about? Jitter is a problem for a lot of algorithms. So you're limited in what you can run over these because of that. So you have custom switches and routers, right? You're at 50 to 100 gigabits a second these days is the norm. You do these cut-through technologies, and that basically means you're just sending as soon as possible with the risk of corruption, which creates other interesting factors. Predictable forward delay, dedicated paths for market data, and we'll get more into this as well, but that's this really big deal of the dedicated paths. So your network topology design has 3 main things. The first one is the minimal hop count, direct connections to exchanges, flat network architectures, redundant paths with identical latency. And that is a real freaking problem, right? Like, remember we talked about cable length here. If you're doing another location, if you got that poorly situated, it just creates freaking orchestration nightmares. Deterministic routing, static routes versus dynamic, dedicated physical connections, traffic engineering to avoid congestion. Disaster recovery is another complicated area, so geographically diverse, identical hardware configurations, but the latency matched failure of tasks. That's where some of these big problems start to show up, right, that we were talking about before. And so from a design perspective, we run everything with BGP. BGP is like the Border Gateway Protocol. So that's like your map of like the major internet points. These are basically like these autonomous systems, and BGP sort of like navigates that. The interesting thing here is we're using a global network level protocol within almost our local networking to handle these issues. And when it comes to the network interface card, we're doing things like offloading and kernel bypass. So this is your normal stack, NIC, kernel, network stack, user space, the application. That's 10 to 15 microseconds of latency. So here's some of the different technologies you can do to do the kernel bypass. Data plane development kit, that's actually like an open standard. SolarFlare and Mellanox are private hardware developers for these things. And so your application can directly access the NIC buffers. So now you're down to 1 to 2 microseconds. And then you do zero copy techniques, memory mapping NICs, buffers to application space. And you eliminate data copying between kernel and user space. And so we're also talking at the network level, we're doing multicast. And we're doing UDP in particular. And so this is this like one-to-many delivery, and it's bandwidth conserving. So like your regular internet usage when you're doing API requests or doing something on your browser or something like that, that's TCP. And TCP is like sending a packet with tracking and confirmation, right? It's slower, but you know it got there. UDP is like throwing this frisbee, right? Like it's faster, but you don't know if it was caught or dropped, right? There's no acknowledgement. Another way to say this is UDP is like a knock-knock joke where no one says knock-knock, it's just a joke. So multicast optimization techniques, right? You get protocol-independent multicast, sparse mode, these types of things, source-specific multicast reduced state, hardware-accelerated packet replication. Like that's getting into that like splitting component, right? Like no overhead into split across clients. Reliability mechanisms, redundant multicast groups, sequence number tracking. This is this really important concept within market data, which is every packet comes with an increasing sequence number, and it's your job to see if you've got a gap. If you got a gap, you can ask for refill, but the markets move so fast you almost never refill. You just take the gap and keep going. But some algorithms need the gap filled. So in your cage is also network shared memory. This is once again where the network is really important because you're doing remote direct memory access, right? So it's memory to memory transfers without a CPU being involved, called sub-microsecond latency between the machines, bypassing the kernel, and all the traditional network stacks with this. For these types of texts, if you want to look into it, it's InfiniBand, an RDMA over converged Ethernet. So these are hardware-supported memory operations across the network, direct memory placement without intermediate buffering, and the kernel bypass once again. There's a bit of a trend here of getting the traditional OS out of the way. And so we have a couple market protocols that are in place for actually trading and making the orders. It's FITS. It's an industry standard protocol. There's a couple different versions of it. It's really verbose, so it's higher latency. But it's order entry, right? We're only doing 3,000 of these a second. So you can be a little bit bigger. And it's really weird and interesting. Like people will actually be like, what's your 55? Oh, the 54 looks wrong. Oh, what's a near 99? Like that shorthand just keeps continuing. Market data though is binary exchange protocols and they're specific to the different exchanges typically. So like Chicago Mercantile, I think is on a different protocol than New York Stock Exchange. Examples like that. So you're talking about custom binary parsers written in assembly that handle all of this. Zero copy deserialization, hardware accelerating protocols on the FPGAs, and memory mapping message templates. So a quick dive into memory and processors. So this is your typical server motherboard, if you will. Right? So you got two processors, you got your memory banks next to them, and then you got where your cards go in, and that's where an FPGA would go. That yellow line is like this really direct path through the actual wiring. between these components, right? Like your FPGA is going to be hardwired to be more efficient to a specific core, and that's going to be specifically fast to a specific memory layer and component within there. So this is worth having some acknowledgement here. And so not all memory is the same. So now we're within one of those CPUs. Here's your different cores, here's your different cache elements where they're located next to it. These are your different latencies between the different cache layers from your core to that cache layer. So you can see main memory is like ridiculous, right? Like going after those chips is 100 nanoseconds. That's really slow. So cache line optimization techniques, so you're aligning your data structures to like what kind of memory you're using. You're prefetching and you're avoiding the fault sharing. And so you're controlling memory with code, right? So NUMA is this non-uniform memory access. And it's memory access that, depends on the location relative to the processor that I was talking about before. And so modern servers have separate controllers for each CPU, so you can get some interesting manipulations in here. And so memory access to a remote node can be 1 to 2 times slower. Remote means it's a different socket. That's sort of what we're talking about here. And so NUMA topology awareness is memory allocated where the request and thread runs. Local is 100 nanoseconds. At remote is the 150 to 200. And so you're doing NUMA optimizations, doing process thread printing, right? And this is like this interesting thing where it's like, we always want to operate this exact threading position on this exact core. And we want to keep these things sort of like warm, right? Like there's a really interesting phenomenon that takes place, which is someone calls up and says, hey, we want to run this slower. We want to not do as many trade operations. That can actually make things slow down because we're not keeping things warm enough. So there's like really interesting paradoxes that start coming into these things. And memory allocation strategies within NUMA become important. So FPGAs, these are these field programmable gateways. It's programmable hardware circuits that can be reconfigured to specific tasks, right? Like a CPU is sequential instructions. This, you get to like pipeline it. It's basically manipulating hardware like it's a custom built circuit without having to do all the chip fab and everything along those lines. It's predictable, no branch misses, deterministic, time measured in nanoseconds. So order execution that gets in the nanosecond range is typically done on FPGAs. And so why? They're consistent. There's no context switching or interrupts. Direct connection to the network interfaces. So those things on the side of the one part are network interfaces. So no OS involvement. And it's a customized data path for a specific like trading strategy around the world. You wind up hybriding these systems though. You don't do everything in FPGA, and you don't do everything in CPU. And so it gets interesting sort of like handling the duality on the CPU is where you get into like some of the more complex things, risk management, stuff along those lines. So now for software, this is where the mechanical synthethy starts to come to light. So this is complex event processing and architecture, key programming events, runtime environment testing. Detailed slides are going to just be skipped over. You can get the link to them later. Complex event processing. So this is going full throttle. You push data, you do not pull it. Streams, not cron or batches. You're processing streams of data to identify meaningful events, pattern recognition across multiple streams. It's real-time decision making on the incoming working data. It's event-driven architectures. You can look at Apache Flink if you want to like see what this looks like with really smart people and maybe some traders contributing. Small and single-purpose executables become really important. So you do one thing and you do it well. You do really fast builds for rapid fixes. Low side effects is critically important here. So lots of small programs to orchestrate, but off-the-shelf orchestration typically won't work here because you're doing something that's just hardware-specific levels. So we're talking about the consistent sub-microsecond latency and predictable execution timing. This is the CPU cache optimization, stay in the cache, not in main memory, zero allocation techniques, pre-allocate, branch prediction-friendly code, so you're leveraging the CPU's branch predictor. And so this is like branch prediction. I guess if I tried to condense this down, it would be like you're architecting software so that you're your first condition in the if statement is like taken like the vast majority of the times, and your else is like an error state that is rarely taken. And so that just makes sure that you're constantly working within these same chains within the CPU. So you can dig into these in your own time. Zero copy, zero application programming. Data movement will kill you. So you have to work with that where that data is and keep it there and share it and handle that coordination. Lock-free programming, so this is a huge issue. So this is mutex acquisition, waiting for other threads to release locks, unpredictable wait times. Context switching when blocked, so it's moving the state between CPUs and the same CPUs down. So it's priority inversion risk, right? Like a low priority thread blocking a high priority thread because of this guy. So what we're really starting to talk about is moving outside of the OS. You're basically building your own mini OS, if you will, with these things. Use the OS to grab your resources of the machine, and then you ask it to step aside. So it's locks versus latency, locks have predictable waiting times, lock-free data structures, so the new text, memory barriers, and ordering of memory operations across CPU cores. Dig into these in your own time. Code organization for mixed Intel FPGA, you can do this. It gets a little bit tricky, but you sort of wind up needing, because you've abstracted the hardware out so much, you can actually manage these with the same code base, and you need to because you want to have some of the common interfaces and data structures applied. Control flow for deterministic execution. So yeah, eliminate sources of jitter is the big one here. Error handling approaches to keep things moving forward, right? Like I sort of talked about before. You want your error states to be really fast. Now for runtime performance, right? So this is CPU and core tricks, bio-optimization, kernel tuning, compile and build, and jitter again. So CPU isolation and core pinning, sort of hit on this a little bit before. It's keeping it away from the scheduler. Right thread, right core, right time. IRQ affinity is getting to the right slot in the most optimal method to get to that FPGA. Dig into those. BIOS optimization microcodes. You run these machines at full blast, full throttle all the time. You don't do any power management, no waiting from sleep delays. Your memory configuration, you reduce delays from error checking, which makes things interesting. Memory distribution, you start to manage within the BIOS, microcode considerations of the CPU performance for different processor instructions, that's at a BIOS level. Kernel tuning, scheduler optimization, even for when you're just using it to grab it and manage it yourself. Memory management by programming swaps, resource limits, and system resource allocation becomes another huge factor. Compiler optimization and build settings, so get really good with compiler flags performance, profile value optimization. Link time optimization is really important, right? It's like that function you were using. Instead of calling out to that function, you now just build that directly in line. You compile your own compiler sometimes. Jitter mitigations, right? So disabling the power management, isolating cores, using the dedicated hardware. And you really need to monitor jitters at the sort of first-class metric alongside latency. So how do you run it? It's testing ops, you need people. Testing, it comes down to replay testing at varying speeds. User acceptance testing are full environments for all parties, right? So in this ecosystem, you will have an entirely equally sized and redundant environment just to do testing within. Just the orders don't execute. But you're getting a market data feed. Everyone's able to test and play with it. In testing, you're actually using debuggers, Wireshark, Valgrind, Magic Trace for your testing. Operating systems, change management, be slow and cautious, right? Performance where you can test everywhere. Environmental consistency, everything is in version control. Your BIOS is in version control. You're not doing anything if you're fetching from a packet manager. Nothing in this space comes for free. Everything is interrogated. You understand everything that you are pulling into these systems. And it's also redundant everything. No single point of failure. Capacity planning and having the spare room. This is a really huge one, right? That we just talked. I said before, a couple weeks ago, we hit double the amount of market data that had ever been seen because of the tariffs. And so that gets really interesting of how do you prepare for that within a fixed space of a co-op. Incident response, speed is critical. Correct answers are important until they're useless, right? Because you can take too long to get the answer for it to be useful. And bullshitting is a really fast path to being fired in this space. You bullshit, you lose confidence, it's game over. That's definitely a great way to get final quick. So what we're sort of talking about here, right, like this mechanical sympathy, does your code feel like it's one with the hardware, right? And so remember the F1 driver, coined the phrase, right? So in F1 driving, the performance bands are very narrow. If you enter a curve too slow, your tires aren't hot enough to grip. If you go through the curve too fast, downforce isn't enough and you fly off the track. Very narrow bands. HFT applications are sort of like the same, right? Like what I was talking about before, right? Like if someone says, oh, we're gonna actually do, only 1,000 orders a minute, well, that slowness actually becomes a problem for us. And so you have to basically make a phase change, right? Like this is from like water to steam. Like there's no like interstitial step. You're just boom, there. And so to continue this, right? The F1 car versus the cruise liner, it's like HFT versus the Facebook, right? So you optimize for perfect versus acceptable performance, microsecond, nanosecond, millisecond to second. Immediate financial loss to minutes of downtime before financial loss of like an equal scale. It's predictable, slowdowns are just annoyances. I think in HFT, you get deep mechanical sympathy. Facebook, you're just mechanically aware. The people and culture are different. You can't expect the CRUD team to handle this, and they don't need to. These teams have mechanical sympathy. The people are very different. They're pedantic, fast, self-driven, trust but verify even of yourself, and reputation is everything. This talk took a little bit more than 40 minutes. That's how many nanoseconds we're at. This cost $544 million. So,
does everybody know that story?
I think I hit on it a little bit in the beginning.
Well, Net Capital with deploying the wrong.
Yeah. It's one of the more infamous ones. I don't know the intricacies of it super deeply. But yeah, take photos and questions, I guess, if you want to try. Go for it.
How do you, I have 100 questions, but how do you roll out changes? Like how do you deploy when you have that level of scrutiny?
By hand, all automated, like fixed versions across everything. So like here's our current build that's in UAT from the BIOS all the way out, and you're laying that out. There are days spent just configuring a new device. So when you introduce that new piece of hardware, it's an ops engineer laying every piece in exactly the way it is. Here's our master files for what the configs are supposed to be in the BIOS. Does it actually match up or not? Does that help?
So are all software deployments tied to hardware?
Yes.
Okay.
Do you see a future, or maybe people are not already, where people start to move to more of like a system on a chip, where like memory is right on the back, CPUs, and much faster access than the traditional like slot
If like chip fab got like really easy, is what I think you're talking about there?
Like M1, like Apple's M1, where the RAM is like on the die with the CPU.
And that's sort of
what it is I'm in that business. They call DPUs, data processing units. They're actually putting system on the chip on the network card.
Yeah.
It's kind of like that FPGA.
Right. But that's my rough understanding of it. I haven't, but yes, I can. One way to also phrase this is we don't really consider other languages like Rust or things like that. Instead, we just consider assembly. Yes, so we will always get a dive into better and better hardware.
You talked about the regulations around cable, like things like that, but you're also in a space that is global, foreign exchange, et cetera, et cetera. So where do you run into regulation compliance gaps? Like, are there edge cases where you can get ahead of the competition? Who regulates and how?
Who regulates and how? Sometimes it's the exchanges themselves because they have to provide a fair marketplace to everyone. So that's often like one of your starting points, right? Like a lot of controls within the exchanges are there to make sure that things are quote unquote fair for the customer. Worst case really screws you up, it's the SEC. Hopefully that helped answer some of your questions. Like I guess like opportunities. I think the biggest issue is just you're always sort of like sampling a downgraded sample set of what was reality. Like, it's just really hard to log these things 100% and maintain that. So it's knowing where that is. It's also then speed of response, right? And like, you're almost sort of creating an algorithm to scale your hardware before the market slaps you. But that's really hard. Like, especially these days with the tariff things, like, it was just really, really hard to see what was going on.
So even just the nature of, well, open and close, here's this volume, but then you go to Tokyo Exchange or even a cryptocurrency where it's different rule sets because principles apply to every one of those markets, right? But at this level of infrastructure, do you see differentiation? It's like you're building a colo around the New York Stock Exchange versus international or crypto or?
So, I mean, yeah, in the US, you're trading on all 12 exchanges as like a fairness component. So you're already dealing with a distributed notion within that. Going international, you just deploy your hardware in there. So like you'll have your hardware out in the, London exchange, things along those lines. As far as for like what you're trading and the different tolerances within there that can show up, like your cryptos trade differently. They're also 24/7 cryptos, so now you're seeing a big part of the capital markets that go 24/7. Go for it.
Development teams, is it full stack or is it cross-functional?
No, it is dysfunctionally narrow and in the weeds.
Yeah. It's very, very
It is
diverse.
like my world of doing like DevOps and trying to work between them is where it's like I really feel weirdness.
What's the biggest contention you see?
It's how much incredible nerdery there is at the hardware level.
Yeah.
And then it's on both sides, right? Like our network guys are like incredibly good at understanding these cards and these paths and everything along those lines. But what you're ultimately arguing about is like how the processor is accessing and grabbing that segment on the card, right? Like, well, I have to be careful here. You're at microsecond differences for like what slot the card is in.
Sure.
And why is it becomes an interesting contention, right? Like I just want my 1.5 microseconds or whatever it may be. Like it shows up there, and I think it's also just the language of coding here is as specific as the language of trading.
Yeah.
You have to know what it means. Does that help answer your question?
Absolutely. One quick thought, do you have a hard time finding talent at that level?
Absolutely. It's really a big challenge.
And more massive than ever because people are drifting more and more away from hardware.
That's a bit of why I'm doing this talk, because I think hardware is still an interesting state.
It's super exciting.
Yeah, I mean, like I said, I've been doing it on and off throughout my entire career, and I'm very happy to be back at this extreme form of it today. Oh, sorry, go ahead.
So Jeff, my understanding is this is focused on the trade execution part. There's another component. Your clients are going to be running algorithms to take different market signals and choose when to submit a trade. How do they interface with the system?
We run
Are
it
they
for them.
co-located within your system?
We run it
Or are they
for
a
them.
separate system that
Yeah, so they can run it on their own separately. Not all algorithms have to be insanely fast. I guess this is another thing to sort of say. So we actually do have like actual APIs for interacting with all of our stuff. But at a certain point, we're actually running their algorithms for them. That's where things get tricky, right? Like as I got to before with the privacy, right? Like we weren't able to tell them how fast they were. Well, it also gets awkward for us to tell them, you may have some algorithmic risk because your algorithm may not be ready to run at these high speeds.
so they're giving you code and you're running that code within your systems?
Yeah, and we're helping them to understand our systems, but we can't be too explanatory, right? Like we can't take risk.
The back end of that, you have the systems that are correlated in the areas where you're gathering up analytics and data coming out of it. You can only focus on the execution part, you can't focus on the marketing part, then you repeat competing with your customers. Like, you're not looking at how trade signals affected prices or anything like that.
We are not, but we need to help them through understanding that.
So you provide that intelligence back to them.
I'll say yes.
There's a big trend in chip makers and manufacturers towards these optimized LLM cards and motherboards and stuff. Is that, is this a different segment, or is that benefiting same customer base? Like, or is this a competing market segment that would be interested?
I mean, there's people that do algorithms that run on those types of chipsets and stuff along those lines. And you know, those fuzzier types of things have been around in this space from an algorithm perspective for quite a long time, pre-LLM. Does that hardware translate to this space? Not too directly from what I'm aware of.
Does it have its own special, like, chip? Like, if you were looking for this type of board, is it industry specific?
I name some of the industry-specific companies, and then it gets very proprietary for which one works the best for which company.
Okay.
What would be an on-ramp for getting involved?
That's what I've done. Unfortunately, my on-ramp was a 25-year friendship. But if I were to say from it, right, like I think getting some trade awareness is really important, right? So if you can get into an environment where you learn the trading, you learn options pricing, you learn how the exchanges function. There's a couple of decent books out there that I've actually found with some of them. I think that is one path into it. I would actually sit down and take a look at Jane Street and their career path in. They have a very strong recruiting ecosystem. They're actually a great resource for some of the public parts of this space. But yeah, I think it's important to have a trading sense in those areas. I think other paths that you can come into this, a lot of these guys have some sort of experience in writing hardware-specific things in other spaces. So, like, you know, doing video encoding, other things along those lines, right? Like getting into the hardware, I think would be like one of those elements in it if you're not like the perfect Jane Street, you know, bachelor's, master's, PhD ecosystem. Like, I think that would be where my recommendation would be. And also crypto, because a lot of it is relatively slop shit compared to capital markets. There's some pretty sloppy things out there, so getting to see how something's sloppy can be very interesting to see where the challenges sit. We have to
Just about wrapped up. I just wanted to ask a question. Of the folks in here, you mentioned Apache Flink. How many people write queries here? Not that many. Okay.
Queries for that, or general?
Just queries.
Just queries in general?
Queries in general. So when you write your queries, you're always assuming that table is static. It has an end. Think about writing a query over a table that never ends.
yeah.
That's the
That's like it's the
problem.
windows. It's a windowed time of a constantly moving stream.
So if you really like queries and query languages, I highly recommend checking out Flink and stream-based queries. It's an up-and-coming area.
It's up and coming in open source.
Correct.
These types of complex event processing has been around a while in the capital market space, a long been
20 years.
hidden. Yeah, it's just privacy route, right? So yeah, at any rate, sorry.
No, that was perfect. So I'm just throwing out, hey, if you want to pick up a new skill, that's a skill.
So I think we've hit the official time, right?
You got it.
All right, thanks, guys.